It's great to be here. Thank you so much for coming to this event. It's a very exciting opportunity to share with you what we've been trying to put together over the last several months. And what really excited me to join MIT Sloan and the finance group just in January this year. What we've been putting together as a finance group, as a Sloan school, with great support from the Sloan school, is something called the Center for Finance and Policy. And sort of the big goal there, and the big realization, if you will, is that said in a somewhat of a dramatic fashion, is that there is a sort of realization that there are some areas where academic finance is very, very good at, and that is, especially at MIT, that there are people like Stu Myers who are very, very good at understanding how corporations work. There are people like Bob Merton who are very, very good at understanding how you can design instruments out of other instruments. What perhaps has been missing a bit from our understanding of things in light of the financial crisis that we just experienced is how complex and interconnected things have become, and how much of a role regulators play in this environment. Having spent 4 years at the CFTC, and 2 of those years as chief economist, I know firsthand just sort of what are the incredible dilemmas that are faced by regulators when you have to solve real issues. There's a statute comes along, or there is some event in the markets, and I'll tell you about one of those events later today, and you have to do something about it, and you may not be well equipped to do something about it. You may not be an expert on this particular issue, and then the first question is, the clock is ticking. Who do you ask? Where is the expertise? And what you often find is that in the academic community, the expertise is dispersed, and also there are some areas where particular expertise on a particular issue might be lacking, because the community may not have been focusing on it for some reason, may have decided that is not something that is worthy of an academic publication. Maybe that is something where some PhD students several years ago were not encouraged to go into. And so now that particular area has not been well researched, and you have to start making these decisions sort of in the environment that's sort of lacking. So we came together and started thinking about how can we encourage policy-related research so that there is a depth of knowledge built on issues that we find in discussions with you, in discussions of forums like this, and discussions with our colleagues of importance going forward. Not issues that necessarily that are on sort of not only the issues that are on the front burner now, but also the issues that we think are going to be on the front burner 5, 10 years from now, so that we can deploy. It's a longer-term project. You can think of it sort of more as a sort of a private equity rather than high frequency. So it's a longer-term development of human capital and building of knowledge base, so that later it comes about. And the sort of the policy part of it is not necessarily that the center is going to get involved in policy and then encourage academics to write comment letters to regulators. The policy part is that policymakers would know who to come and ask when the sort of push comes to shove. And MIT is fantastically positioned to do something like this, because MIT is a center of excellence on quantitative finance, and that's where just sort of the markets and the system as a whole is evolving. So bringing together people and establishing the center is something that we've decided to do. It comes with just sort of the initial stage of developing it comes from three broad sort of research areas that Andrew Lowe, Deborah Lucas, and I have been working on, and we'll to start was bring them together into the center to establish sort of the impetus for the center. In a nutshell, Andrew, as you know, has been working on systemic risk issues and interconnectedness and complexity for a while. I have been working on the role of government as a financial regulator, and Deborah has been working on the work of government as a financial enterprise. U.S. government is probably one of the largest and least well-managed financial enterprises in terms of the sort of managing its own risks. So that's the initial impetus for it. There is already a bunch of work that's being done, and the work that's being done is done out of the existing sort of research areas. And the purpose of having the center, if you will, is to institutionalize these efforts and make these efforts more sustained, because institutions live sort of longer than individual researchers, and or could be interested in particular issues longer. Since it's a long-term effort, we're thinking of starting to build this institution, this center, if you will, and also to make the focus of this work sort of go beyond MIT and even go globally, as witnessed by my standing here in front of you in London. So we will try to attract, and I'll show you some of the existing projects that we already started working on. Try to attract people from outside of MIT. So MIT faculty will form the core group of people, but there are people already working on things who will be affiliated and associated with the center and funded by the center, but the idea is to really build the pool of knowledge and use the MIT as a catalyst and a basis for it. But the pool of knowledge now, in this day and age, is very much recognized is a network. It's dispersed. It's not. We're not trying to build a Manhattan project, a lab somewhere in the desert. We're trying to build more of a Facebook type of environment where we have dispersed people who are interested in issues of these matters. So there is already a consortium for systemic risk analysis that's been created and has been running, that has been sort of devoting attention and meeting on the issues of systemic risk. There has already been work done on regulation, quantitative methods applied to regulation, and the work done on government financial institutions. It's also one of the great things about having it at MIT is the depth of knowledge on coming from other departments within MIT, from computer science, from math, from physics, from engineering. These are, I think, the skills that we really would need to leverage and bring into the world of finance to better understand this complexity and interconnectedness and links and big data and numerical optimization in the era of incredible amounts of data and failure of standard statistical models to operate on data with very large cross-sectional dimensions, and development of very specific type of sort of experiment designs to understand how things work, development of agent-based simulation model, what have you. That's another advantage. So what will be the focus and structure? We're very cognizant of the fact that it's important to start sort of the right way in terms of governance, in terms of funding, and in terms of management of it, and how we attract people to work on it. In terms of governance, it's critical to establish it as a truly independent sort of unit, if you will, which is known for its expertise, for its depth of knowledge on the matter, rather than having particular political or ideological bias. Because then you start running into questions where you would have just one group of people asking you questions as opposed to those who really need answers. So there will be an advisory board that will be carefully selected, and it's also linked with the process of fundraising. So the idea is to raise a large enough endowment so we could spend our time focusing on research rather than go into every year and spending a lot of time trying to figure out where the next dollar is going to come from. So there is a big sort of sustained effort of putting it on a very solid intellectual and solid foundation right from the start. Having said that, it's not like we're not doing things already. We have started working on a bunch of projects. There is already authorization to deploy some funds. MIT Sloan has provided some funds, and some original donors have provided funds too. Management, so there will be key finance faculty who are already involved in this. Bob Merton is a if you will, is a sort of the intellectual father of this enterprise, and having his credibility behind this is absolutely critical. Other finance faculty having the support of the group and support of the Sloan School is again critical to the success of this effort. It's much easier to convince people that and for people to feel that it's going to succeed if you have the support of the finance faculty behind you. The center is going to have a bunch of activities. So, if you will, on the sort of on the what's on the asset side. What's on the asset side, where the investments are going to go, is into outreach, into various speakers who are going to be brought along, into research conferences, research fellows, projects that are going to be financed. It's sort of a standard set of tools to find a way for people to interact and exchange their views and generate excitement really among people, generate competition, generate a desire to work on this, generate a desire to convince their PhD students to start working on something like this, because you're not going to develop depth unless you convince faculty members to convince their PhD students to start focusing on their job market papers of this matter and becoming experts, and then it starts having a sustained sort of feel to it, sustained development. It's going somewhere. It's not just a sort of fly-by-night operation. And so these are the things that are in the pipeline to do that. What are some of the recent CFP projects that we started on? There are many. I'll focus on a few that I'm familiar with that are related to the things that I'm involved in. There are other projects associated with the center related to some of the works that you're going to see. You have heard about already. You'll hear about later today. So one project that's very exciting is a project on financial regulation 2.0. And the idea there is that I spent a couple of years at the CFTC and as a chief economist, and part of my job was to sign off on every single regulation, on the cost benefit of every single regulation that the CFTC promulgated. Literally, I had to sign off on it physically. So otherwise it would not go out. And what that meant is that before I could sign off, there was an effort of sort of many, many months to have me and my team convinced that this is something we could sign off on. And that meant that there were economists who were working with me, working alongside lawyers, and that introduced me to this sort of very clear understanding that we have markets now populated by machines, really, and especially the markets that this agency regulates. And then we have lawyers who are writing regs for other lawyers. But these other lawyers are going to be explaining software developers how to put these lawyers now into lines of code. Now, if that's the end point, then shouldn't we start thinking about it from the start and think of how do you actually write your regs in a way that they will be implemented as lines of code, so lots of things are not lost in translation and don't have to be interpreted. And we're starting this project at MIT. It could be done anywhere, so we're doing it at MIT, where I have a couple of people, one of my colleagues from the CFTC who is at the Harvard Law School and who understands regs, and one of the computer science student who, and we'll work together and figure out how to translate some of the actual existing regs into really what looks like, to me, a circuit or a switch, because the regulator is really, regulation is like a circuit. I mean, it allows certain things and doesn't allow others. So you can represent it in a ways in very clear machine-readable form. Another project associated with that is text mining Dodd-Frank regs. So if my colleagues and I have text mined about 15,000 regs and public comments, and we've come up with some incredible results. We've come up that all regulations promulgated by the CFTC over the last 2 years can really boil down to about 6 to 12 word combinations. So I call it 6 degrees of regulation. It's remarkable. The actual dimensionality of regs is very, very small, which means that you can really represent them as just sort of very concise, machine-readable, just sort of algorithms, if you will. Another project that's ongoing, and we have a couple of people starting to work on it very soon, is on exchange-traded funds. Exchange-traded funds is one of the most interesting recent innovations. It's been growing very rapidly, and over the last 9 months, I've been talking to people, asking them to explain to me what an exchange-traded fund is, because it sort of looks like a redundant financial asset. And people even who I really, really value and respect have a hard time explaining what this particular financial innovation is. So what we plan to do is that we plan to put a couple of people over the summer, they're actually graduate students from Stanford, at the BlackRock offices in San Francisco. BlackRock is the largest issuer of ETFs, and it really wants to understand what ETFs are, and what their liquidity structure is, what the creation redemption structure is, what works, what doesn't. So it's an exciting project that will be done actually on the premises there. Another project is related to U.S. government debt. We had by serving on the Financial Stability Oversight Committee, on the Systemic Risk Committee and Systemic Data Committee, I met a lot of people in the regulatory community. And some of those people I met when I was saying goodbye in Washington, I invited to come to MIT and give talks. And one of the person who came was the Deputy Secretary of Treasury, Mary Miller. Mary Miller is in charge of the basically U.S. government, managing U.S. government debt, managing and issuing U.S. government debt. That's a very large chunk of money. And she came and spent some time with us, talking to giving a presentation, talking to the faculty, and then she got very excited about what we have to offer. She invited faculty members to come and visit in Washington, and we did. And there's 3 things where they expressed their interest in having us help them. Not just us, but they expressed an interest. One is in the understanding whether or not the primary dealer market is still the appropriate mechanism in this day and age for them to just sort of continue in placing their debt. Another is to bring in sort of modern quantitative tools into the management of debt. And the third one is understanding. They announced it. I mean, that these things, again, they're presented by her in public, so it's not a problem telling you something you don't know. Another is they are going to be issuing floating rate note, and they'd like our help with understanding sort of and validation of sort of the design of the note and whether or not it's performing according to the metrics that that they have in mind. So exciting project that will also be done on premises. As you can see, sort of the idea here is that we'd like to deploy people to actually work and absorb the institutional knowledge and get access to proprietary data in these places. So that way you can have, it's not just like regulators would know how to sort of pick up the phone or go and look in the phone book. If they're working side by side with the people that are associated with the center, and they get comfortable with it, in fact they value them, they don't need to go call the central switch line. They can go and call and directly call the sort of people they're comfortable talking to. And finally, there's a project related to automated financial markets and how algorithms operate in markets. That project is going to be based in a number of places. It will be placed, some of it will be done at Sloan, some of it will be done in other places. I'll be visiting BM&F Bovespa in Brazil, where there is one exchange and one regulator, and they're very keen on redesigning their market so that on the one hand they attract high-frequency trading activity, on the other hand they discourage some elements of it that they're not interested in. I had conversations just during this visit with the electronic broking system here in London, which is the Forex trading platform, and they've been experimenting with the market design, experimenting with design of the order types, and there's a very strong understanding that we could have someone here working on it, possibly someone affiliated with the LSE, for example. There's a strong desire. Went and visited Google's New York office, where their Google Finance is based. There's a strong desire of them helping us with especially sort of big data issues and issues related to sort of processing big data associated with this market. So there are a lot of interesting, very interesting and promising connections, and the I feel that there is already just sort of work, there is already the initial impetus to get things done. There's certainly a lot of interest. There's also a lot of interest from you, the community of market participants, and would like to hear on this occasion and other occasions what you are particularly interested in having us work on. As you can see, there are issues related to banking here, bank capital, Basel II. There are issues related to other issues in financial innovation, issues related to whether or not the financial instruments that are out there now are really serving the role that, other than fundraising role for corporations, are they really serving the proper role as vehicles for households? You'll hear about, household finance and issues related to that, issues related to systemic risk. So it's an exciting new project. I'm glad I had a chance to chat with you about it. In some capacity, we're very passionate about it, and we put our heads together. It will be done with more participation, with more funds, with more networking, with more just sort of outreach. I think it could make a very strong impact, and that's what we are aiming for. We're aiming for a big, strong impact, not for just sort of fiddling around on sort of the margins. Thanks a lot.